Here's the Wavegenius Elliott Wave Forecast for April 11th, 2014. On the S&P 30-day 1-minute chart, this is probably the most blatantly obvious downward 3 setup there is. You have Wave 1, Wave 2, Wave 3. It's just almost the most obvious thing I've ever seen. But the retracement actually retraced back to 0.618, and then it dropped below the A wave low, which sets up either a C or a 3. If there's a C wave, it would target as low as 1810 to 1815 in a C wave, but in a downward 3, it would target as low as 1770. This is a downward 3. So this setup right here is just blatantly obvious to me. So I went really short at the close yesterday, and I bought SQQQ. I took whatever leverage I had, leveraged as maximum as I could into SQQQ. I ended up with 10,000 shares of SQQQ at average price around $59.25, and pre-market's about $60.50. So I'm up about $1.25 pre-market on 10,000 shares. NDX, pretty obvious setup to me that this is either a downward C or 3. The C wave would take it to as low as let me see, drop 200, 3,400 would be the first stop. Second stop would be about 33.50. So those two targets, 3,400 to 3,350 in NDX would be the first one would be C wave, second would be third wave. And if I get the maximum target, it could probably be about a $50,000 trade. So that's why I went completely 100% maximum short. For the Dow, targets would be, let's see, ABC would be about 15,900 in the C wave. Downward 3 would be about 15,500. So there's still plenty of downside to go here, and that's the reason why I went short, because this is blatantly obvious. At least ABC or 1, 2, 3. If it returns to a 3, it'd be pretty vicious. Previous 4 is actually 16,050, so the first layer of support would be 16,050. S&P previous 4 would be, remember correctly, about 1,800. So those are the levels. There's still basically the levels to, like, the downward 3s are just pretty blatantly obvious to me, so I'm going to stay short for a while. That's a wrap.